The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us out here. Right now, we have the Dow Industrials down 480. You get the Nasdaq off 122. S&Ps are down 54. We get some action to the downside, folks. Percentage-wise, the Dow Industrials right now is down 1.9. Nasdaq's down 1.7, as well as the S&Ps. Gold contract up $5.40, trading at $12.48 an ounce. We have silver flat, $14.52 an ounce. Light sweet crude taking a hit, down $1.25 at 51.61. Notes and bonds, bottom line is that if you pay attention to notes and bonds, folks, they have been saying for a long period of time that money is going into where they just want to make sure they get their money back. You have the 10-year up 20 ticks, 120.20. That's already overtaken the August highs in a big way. You have the 10-year yield right now at 2.84, and the bottom line is that there's plenty of folks that never thought we'd see 2.84 again in the next few years. The 30-year up a full point, 143.07, and King Dollar's got some conviction on the way down today. We get volume on the way down. We're at 410 on the way down, 96,600. The euro is trading at a price point of 113.96 to $1 US, and the yen is down there at 112.42 to $1 US. Let's go over to our man, Mr. Kevin Hinks at TD Ameritrade Thinkorswim. And don't forget, folks, every trading day right here, 11 to 12 Eastern Standard Time. Outstanding show if you want to understand options, defined risk, option strategies, futures, all of the above. Great program. Just go right to YouTube, TFNN. If you happen to be driving down the West Coast right now, waking up in the morning, just always remember that each and every day. Kevin Hinks, what's going on?
Good morning, Tom O'Brien. 285 on the 10-year. Did you ever think you'd see it?
No, exactly. Seriously, I mean, you know, we've been talking about it, right? But it's like,
yeah,
that was quick.
Yeah, we actually joked on the air about it. It seems like a couple days ago, Tom. Are we really going to see a 2 in the handle of the 10-year? And we're not just seeing 2. We're not seeing 2.9. We're seeing 2.85.
Seriously, folks,
amazing.
It is amazing. There's no doubt. As Kevin just said, folks, yeah, it could teeter and go on the other side of 3, but a 285 is a whole different number. You know,
it's a long way from 3.
It's a long way, and if you want to just understand how long it is, for the year, the low for the year is 2.3, the high is 3.2. Well, guess what? We were at 3.2, folks, only 7 weeks ago. And if you took the percentage, that means we can be at 2.3 in another 6 weeks.
Right. I'll tell you what, Tom. Robert Kaplan was on television this morning, and he, for the first time, I'm telling you right now, it's my opinion.
Yes.
December is going to come into question here. A December rate hike is going to get put on the table, and if they do raise in December, which I still expect them to do, they are going to go complete dovish. Going forward. No,
I absolutely agree. And what's amazing here, as Kevin's speaking, folks, so when we left before President Bush's funeral, the probability inside the Fed futures, folks, okay, was 78%. It's 60 today, Kevin. I just pulled it up.
I'm telling you.
It just went from 78 to 60 in 24 hours. Yeah.
And a lot, I mean, to hear, you know, one of the members, you know, this is the Dallas Fed president.
Yeah.
He's a member of the FOMC. To hear him talk about patience and how, you know, strong his wording was is pretty. Even I sat back and well, wow.
Yeah.
He's telling us. I think he told the street there that December is now in question, and you see the probabilities drifting back to 50-50. That doesn't surprise me at all.
Yeah, and boy, that was a fast move. There's no doubt about it, man. There's no doubt about it. And you know what happens here, folks, is that we have about 2 weeks Yeah, we get a full
Right.
we get a full 2 weeks of really good trading, but that's what kind of makes this a little bit more danger in this pot, kind of where we are right now, because that big money, right? They're going to decide, okay, where do I want to be? And you know, every trading day right here, folks, 11 o'clock. This is where options come into play, because imagine, Kevin, you know, you got a big portfolio. Well, the bottom line is that they got to get this thing delta neutral quick, man. I mean,
right.
You know, because none of us know, like, really where it's going. I mean, we're all in the probability business. But, man, if I was into big money right now, I'd just get a delta neutral and say, okay, man, let's see where this, let's calm down a bit. Let's see where this whole thing shakes out. Because when you look at internationally, folks, internationally got smoked last night, you know, in a big way. And so,
right, the international markets, I mean, that's really what heightened our sell-off, was the international markets overnight down, you know, more than 2%, pretty much across the board. And then, of course, the headline about Huawei and everything there just threw more uncertainty on this market in terms of U.S.-China trade. There's just a lot of things going on right now. It looks like, you know, interest rates, you know, and the Fed, you know, headlines, internet, you know, data, it's all looking like just putting a lot of uncertainty in this market, Tom.
Right.
And you can see in the numbers.
And, you know, this is, you know, if you're a long-term person, if you're a trader, you trade it. You trade it up and trade it down. You're a long-term person, well, start getting that list, folks, of what you want.
Right.
Because guess what? The bottom line, we haven't had a correction in a long period of time, and, you know, looks like we're going after these lows again that were generated out here in October. And, you know, we'll see where it stands. You know, one of the leaders, Kevin, Apple, and it seems that, you know, it's going after its low right now today. It's like, okay, you know, what are you going to do? What are you going to do for me today? We know they're not going to give out the fundamental numbers. So it's like, okay, where is that going to go? It just depends on how many more, I guess, broker-dealers jump in on the crowd that, you know, they're...
Another story, Tom,
Yeah.
of just a company that just can't get off the headlines.
Right.
So every day there's some type of headline now about Apple.
Yeah.
And you know, it's amazing to me that these analysts come out now at these levels and are downgrading Apple and changing numbers on Apple. It's you know, it just tells me what's going on in the overall market, and you know, it's just you know, it's kind of a head scratcher. Frankly,
yeah,
but
and
this is what we trade, right? This is what we do.
No, this is, and that's why defined risk is so important, folks. That's what it really comes down to. And what happens that you really want to wrap your head around is that when the market gets down like this, if you are looking for something, what I've always found, Kevin, is that when no one wants it, that's where in the option market, the reality is that some of those calls, even though the VIX is higher, basically are very inexpensive. I mean, you can go out 2 or 3 months, and it's not like, you know, going out this month, you know. So,
you know, Tom, there is just so much. This is a perfect time for people to be using options because of just what you said, just lower overall margins in options.
Huge. Listen, folks, right here, 45 minutes. Kevin, you have a great one, safe one. We look forward to the program. Have a great weekend. We look forward to speaking to you next Tuesday.
Thanks for having me on, Tom.
Thank you. Stay right there, folks. Dow's down 460, Nasdaq's off 108, S&P's are down 49. We'll come right back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow Industrials right now down 450. You get the Nasdaq trading out 102. S&Ps are down 49. Now, if we go over, folks, and take a look at a few of these sectors, what you're going to see is this, is that we start with the financials. They've been in tough shape, period. But bottom line is that now what they're doing is that they're challenging their lows. Now, they're going to have volume out here today. This is extraordinary volume, actually, for only 40 minutes into the market. The last swing low out here in the XLF was $25.02. We hit 25.18 today. You've done 19 million shares. Well, you're going into 115 million. This thing wants to basically blow this thing apart down at the lows. We go take a look at that. Now that's the XLE. We go to the that's the XLF. We go to the XLE, and what you're going to see is that this already blew away its bottom, saved itself, you know, at this particular point. Bottom line, though, we are going to have monster volume also on the get-go on the downside. $63.44 is a low. We got to $63.53, and we have volume already of 5.2 million. Well, you're going after 14. So bottom line is that that thing is saying, number one, you have a break, you're pushing into it, you have an expansion of volume, and we bring this back and we take a look at this. What you're going to see is that the next number here looks like 61.81. And 61.81 is the low that was established out here in August of 2017. So problem in paradise. We go into, let's go into the NDX 100 and just see the strength versus the weakness inside the NDX. And this is what you have. You have Shire is up 2.8%. You have Workday up 2%. Take-Two Interactive is up 1.4%. And Electronic Arts is up 1.2%. When you take a look at Take-Two Electronic Arts, those have been in a downtrend in an incredible way, actually. Let's pull this up so you can see how we'll start with Take-Two. Take-Two, the low of the year is 92. The high is 139. You're trading at 103. Now, let's go take a look at the losers inside the NDX. And you got Broadcom down 3.6% or $8. Pacecar is down 3.5. Lam Research is down 3.5, and Xilinx is down 3.4. We go back. Go to Lam for a second. Lam CEO, they canned him over the. 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 They canned him over the day off here for President Bush, you're going to see that this equity is down good. The high was generated out here at $234 in March of this year, and we're at 144. Huge number, actually, on the way down. Some of the higher volume equities out here, and we are going to have volume out here in a big way today, folks. And the real problem, I suspect what we have also is this, is that you're dealing with Thursday, Friday, who's going to buy coming into this weekend when you get a down market all week, including overseas. Bank of America right now is down $5. You got Bank of America is down 89 cents. Apple's down $5, big number there. Microsoft's off 180. You got Citigroup down 280. Oracle's down 220. You get Facebook down 260. If we go over and we take a look at Apple next, what you're going to see with Apple, the bite has been taken out of Apple, folks, in a big way. There's no two ways about that. So Apple's going after its swing low, and we've done 12 million shares. You're going after 44 million. So number one, it's saying that you're going to get the volume. Now, this is a big one. This is why. So an A point on Apple is 210. And I'm doing it the conservative way. A B point is 170. So you're talking about a 40-point A to B. Your C point is 184. That gives you a 144. And it looks like what we're going to get out here today is that you're going to get a confirmed ABC structure on the way down. So if we go back to that 144, what you're going to see is that this infamous February 9th high volume low is 150. So you get two different things happening. 150, my take is always one to be tested. On top of that, however, is that we have a 140 price projection. So if you blow that away, what you're going to see here is more than likely you're going to get about a 130 inside Apple. Now, you get 130 inside Apple, you're talking about a 50% haircut. Well, no, 40% haircut from October of only this year. That is a monster deal. And then, of course, what ends up happening is that you're back to February of 2017 of where we are. So, you know, if we get that, let's say we get that next 60 days, well, guess what? We're in January of 2019. So you get a 2-year deal that's come down the pike, and you're in trouble. Let's go over and take a look at Goldman Sachs. This is led all the way down. Now, Goldman's a confirmed ABC structure on the way down. What Goldman did do on Wednesday, on Tuesday, took out a swing low, took it out with volume. The A point out here is 234. Your B is trading out at 188. So you're talking about 46 points. Your C's 198. So we're talking about $1.52. And right now you're at $1.80, 180, and 152. Where are you? Yeah, well, 158 is a swing low that was established. 158 is the high of the low that was established in February of 2016. So that gets, it's pretty wild, actually, because watch how this works. Oh, this is going to be strange. Let me bring this back a bit. Because you know what, where Goldman's going, folks, this is actually, yeah, this is pretty intense, actually, because where this is going, in one way, you're saying, okay, it's going back to where we're trading in 2006, and then 2008. Yeah, this is a huge problem, man. Because you know what this puts on the table? This puts on the table that Goldman can actually go after. Okay, so there's a couple of different numbers. The first number that we're going to watch real closely is going to be 172. We're at 182. 172 is the high of one of the high volume lows that were established in 2008. And if in fact Goldman can't hold that, then that's going to be a huge problem. Now, when I look at the volume characteristic of how we're coming down versus 2008, it's dramatically less. So your probability is pretty high that, you know, the 170. Yeah, the 170 should hold. Hey, we'll see where it goes, but that's something we want to keep an eye on. Let's go over to Google, because what Google had done is this. Google's the only big equity that has tested the February low levels twice, rejected them. And the way Google's actually trading today, it looks the same type of setup. So it's going to be pretty cool if we see Google hold in price, the market continues down into that S&P from the February of this year. And the reason is that if it gets there quick, folks, you'll hear everywhere that it's the end of the world. And guess what? That's going to be the buy. So volatility's out here. We'll see where this baby shakes out. Dow Industrials right now down 260. You get the Nasdaq off 84. S&P's down 45. Stay right there, folks. Come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now is down 430. You get the Nasdaq off 84. S&Ps are on down 44. Inside the commodities market, folks, let's go over and take a look at the crude contract, because bottom line is that you have it down $1.95. It's down 3.7. And this baby, you talk about getting hit hard this morning. This gets really intriguing. And the biggest intriguing most intriguing part about it is the aspect that OPEC, Russia getting together saying that, hey, guess what? They are going to basically cut oil production. Well, guess what? They're not cutting it enough because this market still wants 45. So check it out. You're talking about an oil market that we were trading at $76 in October 3rd, right? Bottom line, we're at December 6th. Straight line move down, and guess what? You get monster volume today, folks. This is going after its swing low of $49.41. We hit 50.23 today. Now, at 50.23, and we're trading the same contract. We're trading down there at 813,000 contracts. Well, we're already 592,000. This thing is going after its swing low, has volume behind the move, and if this is an ABC down, this is where it gets really intense, because you're talking about the first leg is $24. And that would set up, that would set up a $30 oil contract. Now watch this. Now we bring this back. I believe 27.50 was the actual low that we hit, for about 10 minutes. When we hit that low. Let me pull this back. 27. I just seem to remember that number. Let's see what we got. Come on, baby. I'm putting this back 15 years. I don't need 15 years, but okay. So, okay, we hit $32.08. We had 26.05. We had 26.05, and it's not that long ago. February 2016. Right now, where I'm going with the 45. The 45 is the swing points. That's the swing point. But guess what? We break this. We're going to have the volume. The real question is going to be, do you totally break the number? Because we haven't got to the number yet. So the number we're talking about is 49.41. And I don't expect we're going to get there today either, by the way. But bottom line, it's game. It's on. We go overseas. Overseas took some big hits last night, folks. We take a look at Asia. Asia was down 1.8% to 2.3%. And then Europe this morning is down 2.9, 2.7, all of the above. Now, for the year, what you have is this. For the year, our markets actually look healthy. You have the Dow Industrials right now that basically flat for the year. You have the NASDAQ that is still up 2%, and the S&P's down 1%. When you go across the rest of the world, it's like heavy. You get the FTSE and the UK is down 17%. The DAX is down 14. No, the DAX is down 20. So the DAX would basically be the first one that I see in those major indices that we take a look at that is saying, hey, I'm in a bear market, man. Oh, look at this DAX. This DAX is blowing away at swing points. Okay, let's take a look at this. Okay, so this is going to be a monster ABC down. You got 12,400. Ooh, 11,200. So we're dealing with a 1,200 point A to B, and that's going to get you a 10,000. 10,000. Oh my God, we're almost there. 10,000. We're 10,800. It's going to get you to 10,002. That makes sense because that's 10,004. Yeah. When you put this in a monthly for a second, when you take a look at the DAX, what we have is this. It's taken everything back from February 2015. February 2015. Yeah. It's a big move. It's no doubt a big move. We get over to the Nikkei now for all the folks in the metal market. This is a big number. What has happened is this: is that the Nikkei's going south. It has volume behind the move also. The Nikkei wants to go after 20,970. If we go over to the yen, what you're going to see is that the yen is coming down and getting strong with conviction. So we're down 86 ticks, trading 112. Looks like the yen wants to run down to this 111. That sets up, we go over to the gold contract, what you're going to see is that is setting up higher prices in the metals market. We have some good volume in the metals market today. You're up $5. You're trading at a price point of 1247. Now your swing point out here is 1252. So you're not only going to hit it, I suspect it's going to blow it away. Now this is what's so cool in the metals market right now. There's not much to stop the metals from going up to 1323. And psychologically, the swing point that we got to at 12, well, that it's going after right now, 1252 is a big number. If I bring this back and do the same thing that I just did with the oil market, what you're going to see is that because gold hasn't caught a bid in so long a period, there's not much in its way to stop gold from going up to 1365. The swing here, which on a continuous contract we're already over, is 1239. You want to keep your eye on basically the 1252, 1254 area. If we take this out, you're going to see a very fast move. First up to 1264, and then I suspect going right up to the top of the range, which is that 1365. And the note and bond market, if I bring up the TLT, the note and the bond market is just, it's been saying this for a long period of time. Actually, I'm going to go over to the 10-year and take a look at the 10-year. What you're going to see, I think the 10-year is already over. Yeah, it is. The 10-year is already over, yeah, over its August highs. So 120.17 was the number. We're at 120.22. And you get monster volume behind the move, folks, right? Right now, we already have 1.6 million contracts in the 10-year. That is saying that we're going to come in with, man, we're going to come in with some big numbers, man. That's actually incredible. We did 2.4 million. 2.4 million, you know, is a big number in the 10-year, but we're going to do like, this is like a good 3.5 easy. That's a big number. And the yield, of course, as I meant, Kevin Hinks and I were talking a little bit earlier, we're at 2.84. And if we take a look at that, that's at a 3-month low. I'll change this to 6 months, and you're going to see 2.81 is the low for the 6-month. Now, if I bring this back to a year, what is really intriguing is that we're in the middle of the range for the whole year. The way that we came off the high yield to where we are right now, if we did the same thing for another 6 weeks, we'll be at 2.3, folks. We were at 3.2, and we're at 2.8. It's a monster number. And guess what? It has to do, the Fed can say they want to do whatever they do. When you get a market that pulls back like this, that's a huge amount of wealth that disappears like that, it makes a difference. Dow Industrial's down 278, Nasdaq down 96, S&P's off 48. Stay right there, folks. Come right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow right now is down 500. You get the Nasdaq off 101. S&Ps are down 51. And we go over and take a look at Signet Jewelers. You're going to see here's another equity that not only is getting wiped out here. You know, you're down basically 20% this morning, down $8. When you do pull this back, what you're going to see is that something pretty substantial. This was trading out to $150 in 2015. Does a monster leg down, has volume on the way down, does a counter trend bounce up to the price point of 71, then gives it up in spades. You know, this is not only going after that 33. It looks like it's going to blow it away with volume. Now, if we go over to the indices, folks, what you're going to see is this: you are coming into lower swings with volume. That's a problem child. The swings we're talking about, I'll take the highest volume part of this is 136 million. The last swing out in November, we're going to blow that away today. We're already down 42 million, and you're talking about the aspect that we're at 70 minutes into the marketplace. So that's taking that out. That's the first part. Second part is actually bigger. What we've done here is that we're going to have higher volume as we're going into the swing low of October. And what you have there is that when you are coming into a Friday in a bad week, not only just in the U.S., but across the world, guess what? We very well can be at this 252 next week. And 252, folks, is the number in the SPY that I suspect we're going to get to. That's the February number. If we go over to the small caps going to be the first one to break. Small caps out here today, you got down to 144.16. Your last low was 144.70. Your high volume low, I believe, is 142 something. Let's see. There it is. Yeah, 142.50. We're going after it. That's the small caps themselves are going to give us a big heads up. Is this February low going to hold or not? The way that the small caps are trading right now, your probability inside the small caps is that you better, if you're a bull, you want to see the small caps hit this thing tomorrow. You do not want to go building cars over the weekend, meaning that because if you don't hit it and you get a small bounce, that's more problems because we got right next to it the last time we came down. You have volume in the move. It's got to get the test. And, you know, we'll find out when it gets the test, can it handle it? Amazon, let's go take a look at Amazon out here. You're talking about holidays. Amazon right now is trading $16.52, 2.7 million shares traded. That, it's held price. Amazon's actually doing pretty good. You know, we got the $16.09. It's only down 15 bucks. Amazon would have to basically get up and over $16.65. And the $16.65 number, what that is, folks, is that when we came down hard on the 29th of October, that's the number, that's the high of that number. The more that it stays inside the $16.65, the higher the probability that we will get down into lower price. You know, the SMHs just have continued to basically nail the Nasdaq on the way down. SMHs right now are down 222. You're trading at 91.37. That has, let's see, 2.3. Yeah, that's going to have volume too. There's volume right across the board. There's definitely volume right across the board. So, hey, get your stops in. That's the real bottom line. If you're a longer term person, just get your stops in. Because if we break this high volume low, then lower prices will continue to basically come to us. You know, one of the tigresses in there saying, let's see, I'm not going to do the whole quote, but the gist of it is that it's too late to sell, meaning to sell into this. And I understand that concept, but in a market that is trading like this, it's actually never too late to keep selling into it on an intraday basis. Because what happens is that we haven't been used to this in a long period of time, but when you see a trend that is this heavy on the way down, the surprises go to the downside. That's how it normally works in a market like this. And I know the comprehension of like, okay, hold it. This is crazy. We're already down 3%. We're not going to be down 5%. Well, guess what? We might be. That's, you know, when you have fast markets like this and the sell-off is extraordinary, what does happen is that the legs down actually go dramatically higher. That's, you know, that's kind of how it goes. And then what you see is that then it gets overdone. Having the day off yesterday is a problem for the markets in general, because what happened is that the rest of the world could trade. We weren't trading. Wakes up in the morning, people are thinking, I got to sell, I got to get out of this. And then you get the aspect of that's when you're going to get an acceleration. And time-wise here, it's a problem. The problem time-wise has to do with the week, has to do with the time of the year, has to do with all of the above. And you can see as we're just speaking, it's accelerating. And the market's rattled right now. And I suspect the longer that, here, I got to bring this up for a second, because when Kevin Hinks had brought this up, this was quite a contraction, folks, in the aspect of the probability of where Fed funds rates are for this December 19th. You know, we're talking about this, it's a 64% now, so this does move a lot. And I suspect that the Fed still will go up in December. And the only reason that the Fed will go up in December, folks, is that if they don't, then the whole market won't believe a thing the Fed's saying. That's that's how I'm looking at this particular point. Because if you remember, the Fed was saying, well, no, we'll keep our eye on the market, but the market is not going to dictate to us where the interest rate structure is going to go. So they're going to have a hard time pulling back on that rate cut. The rest of the rate cuts, forget it. It's here. If we take a look at this, what you're going to see is this. Let's see. There's not one right now in 2019 that is over 33%. How's that? And when we left on Tuesday, you had two of them over 50%. It's gone down that dramatically. Because what does happen is that after a rout like this, it takes a good period of time in order to basically get people back into buying, period. Dow Industrials right now down 545. You get the Nasdaq off 115. S&Ps are down 55. Stay right there, folks. Come right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials right now trading down 530. You get the Nasdaq down 112. S&Ps are off 53. Let's go over to Bitcoin. So Bitcoin is well under the 3,000 level right now, folks. You're down at the 3,600 level. Last low out here was 3,522. And, you bring this back. There's not much in the way here for that baby to get into 3,000 flat. That it traded there for 3 months in May, June, and July of 2017. And guess what? Once you're into the 3,000 level, if you break that by a couple $100, you're going to be down to $1,200 in a second. It's going to be pretty shocking as into the aspect of how you get from 19,500 in December of 2017, well, even to the price point now of 3,600. We're going to have volume in all these indices out here today. Thus far, let me just look at something. So let's just look at this tick. We got, oh, this is dangerous because of this. We only have minus 1353, folks, in the tick. That means that this downdraft is not even close to being over. And because what you need is that you need not an orderly selling. You need a very fast selling for the tick to go exponentially higher very quickly, and we haven't got it yet. So even with the aspect that you are down pretty good the last 5 days, the market itself, the panic hasn't taken place. And bottom line is that this market won't find a bottom until you get some panic inside the marketplace. You stay right there, folks. We got Fast Market coming up next. And, of course, then we get our man, Mr. Basil Chapman, Steve Rhodes, Dave White. Be back this afternoon, folks. Have a great one. Have a safe one. Recap out here. We get the Dow Industrials right now down 577. Nasdaq's off 123. S&Ps are down 60. Stay right there, folks. Fast Market coming up.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.